How's it going, everybody? My name is Antonio, and today I have Ross McElroy on the barbecue to see how well he cooks. Who's not here with us today, though, is your financial advisor. This is going to be a conversation that's general and impersonal in nature, one that will include a lot of forward-looking statements and generally hopes for the future, if you can call it that, which means that not everything said or promised in this video will necessarily become reality. And what that means for you specifically as a listener is that you have to do a lot more digging, research, a lot more work, as well as potentially consulting a professional financial advisor before taking your own decision in the end, because the exploration and development and mining space in general are extremely risky parts of this forgotten market right now. And there is, as always, 100% risk of capital here. That all said, Mr. McElroy here is a professional geologist and the CEO, president, as well as a director of Fission Uranium Corp. Fission Uranium is a $400 million market cap uranium development company. That probably hurts to hear it that it's 400. But this one trades on the main board in Toronto under the ticker symbol FCU. Being a uranium development company, what that means specifically is that they went looking for uranium in the Athabasca Basin over a decade ago. And in 2012, if I'm not mistaken, they found something of economic interest. They made a discovery. They called it the Triple R discovery. Now it's a Triple R deposit, which is located on their Patterson Lake South PLS project, which sits on the southwest corner of the Athabasca Basin. And part of it, the most important part, sits actually under the Patterson Lake, and it's nestled sort of nestled, I guess, between other economically interesting projects like NexGen's Rook 1 properties there, Cameco's Hook Lake is there, if I'm not mistaken, and I've written down that Orano's Preston is also there, and there's also a few other companies in the area. How big of a discovery are we talking about here? Well, Fission updated its resource estimate in September of last year, of 2022, to an indicated resource of about 115 million pounds of uranium at an average grade of 1.9, actually almost 2%. And that's resulting in what they hope to be nearly 15.5 million pounds of yellow cake in annual production. There is an additional 15 million pounds in the inferred category. That's at a 1.1% grade. And another big chunk is in the probable reserve category, so less of a certainty there. But that one equals nearly 94 million pounds at 4.1% of uranium. So suffice it to say, this is a big deposit. And although not the highest grade for the Athabasca Basin, still high grade compared to other deposits in the world, especially considering that it's a shallow deposit with mineralization starting less than 50 meters below the lake and goes up to about 300 meters deep. Fission's January 2023 feasibility study on this deposit showed that it would be economical to build a mine on this location, and the feasibility study raised the mine life to 10 years as well from previously 7 years, with an initial capex of around $1.1 billion and an after-tax NPV discounted at 8% of $1.2 billion. That is assuming an average realized price of $65 per pound of uranium sold, which results in an after-tax internal rate of return of about 27% and an after-tax life of mine cash flow of almost $2.8 billion. And they are hoping to use the underground mining method there. Like anything out there, though, the deposit is not perfect. It's got its risks to it. It's definitely got challenges, so to call it, among which that it's under a lake, so the environmental impact is not small. We're going to be talking about that. It's also 160 kilometers away from the highway. Not quite NexGen here, but it's still going to need investment in infrastructure. And, financing 3 times the market cap is also not the easiest of tasks. But again, those are all things that we'll be touching on in this conversation. So that all said, it's time for me to shut up. Mr. McElroy, thank you for being here, sir.
Great to be with you, Antonio.
What did I miss in the overview here?
You didn't miss much, but I'll correct you on one thing. I think you said 160 kilometers from the highway. It's 160 kilometers from the nearest largest community of La Loche, but it's actually the project area, the deposit's about, would it be 2 kilometers east of the highway that runs up through the middle of their claim block. So it's very close to the highway, which I think gives the project great access. That's just one minor point of clarification, but otherwise, I think you touched on a number of important factors for us to discuss.
Okay, well, let's do that. Thank you for the correction there. Let's touch upon the important facts. Again, you've updated your feasibility since last time we spoke to what I just talked about. So let's start you off vaguely, I guess, as the barbecue is heating up. Are you happy with the results?
Yeah, I'm really happy. I think that what it showed more than anything is that there weren't any surprises between the pre-feasibility study done in 2019 and now the feasibility study in 2023 that we completed. You're not looking for surprises in a feasibility study. You're looking for confirmation of what your plan was, that it was viable, that it all made sense. You do a lot more work, obviously, in the feasibility study to prove these things up. And that's what, I think the main outcome of the feasibility study was. And I'll also add what was really encouraging too is that, we've experienced a great deal of inflation over the last couple of years. And so, these are fresh new numbers that include, that are done within this high inflationary environment. And yet we still been able to demonstrate that this promises to be one of the lowest operating cost mines out there. It's in, so it's still going to be in the tier one quartile of operating costs, in large production. The other, maybe the other point of clarification too, or at least what we saw in the feasibility study, we'll be averaging production of around 9 million pounds a year. So, I think in the pre-fees, we were a little bit higher. We were 13.5. So we're, but that's only in certain years. But this is averaged out over the 10-year mine life. We're looking at around 9 million pounds. And yet, we can probably talk about this during the conversation, there's a lot of room for growth. So when we see a 10-year mine life, I'm pretty confident that it'll be, 10-year plus. I think there's an excellent chance to substantially grow the resource, or at least the mineable reserves from what we know of them today.
Right. And I guess I'll have to disagree there when you said there's no surprises. There was a surprise for me because the capex didn't go up, and I expected it to go up because it was between an inflationary period. So what I'm wondering here is, should I trust the capex number? Because your OPEX went up quite a lot, nearly doubled. The capex stayed almost the same despite inflation. So talk to me about that. What makes you confident that the number is right and that you'll be able to build this thing on budget?
Sure. Well, there were a couple of reasons for the capex actually being less. We'll say, for maybe on, there were a lot more efficiencies in the feasibility study than what we were looking at in the pre-fees. And, there's sensibility issues as well. For example, in the pre-feasibility study, we had envisioned moving the highway around the project area so that, we have a tailings management facility out to the west of the current highway by a couple of kilometers. And what the pre-feasibility study showed is that we were going to, reroute the highway around this area. It was, I guess common sense sort of told us, well, we don't actually have to move the highway. What we can do is control traffic across the highway, with lights and signals. So the mine, it's not a high traffic highway to begin with. So we'll be able to control the traffic from going across the highway with signs and lights, which is a lot cheaper than rerouting the highway. But some costs, of course, were moved over. So we're no longer looking at buying all the equipment, the mining equipment, as was conceived of in the pre-feasibility study. So we'll be looking at leasing equipment, which I think is, much more common in today's mining scenario. So that pushes the costs into the production side rather than the initial capital outlay for mining equipment. So that's also a factor of why, sort of the operating cost would have increased that with the fact that inflation, but you're moving the capital of purchasing equipment over into leasing. So you haven't eliminated those costs, but you sort of moved them down the line, which is part of the reason that the OPEX, goes up, but the CapEx remains stable because we've eliminated some costs and moved things over. We still have the countering effect of inflation in there. The net result is the CapEx was more or less flat, as you say, slightly less, but the OPEX, of course, is higher. There's inflation in those aspects. The consumables were certainly a lot higher than what they were in 2019. So the net result is, I think the underlying financial numbers were not terribly different between the 2019 pre-feas and the feasibility study. What we were able to demonstrate is that we'll have a much longer mine life. We brought in the R840 West zone that wasn't part of the pre-feasibility that's now in there. So we're dealing with a larger resource, substantially longer mine life. And, I think, overall it was definitely a positive gain compared to where we were at the last major study in 2019.
Right. So that's budget. I still think it can be done on budget. What about on time? I mean, you've always kept saying that you hope you'll be cash flowing before the end of this decade. I get, I say that's a very ambitious goal given the permitting environment in Canada and all that, but also given the state of the market right now. And what I mean by that is that you ran your study, the feasibility study, you ran it at a price that's 50% above the spot price of uranium. So I guess a multifaceted question. Does that mean that you won't start building before the price of uranium hits 65? Or do you hope to have contracts signed at 65 before you can start building? I mean, talk to me about that.
Yeah, sure can. Well, I think it's, it makes sense to use a higher number than what we had in 2019. The price of the commodity is moving higher. And I think that, 65 is sort of the new, industry standard for feasibility studies. We're not the only, company using $65 this year. There were other, in 2022, 2023, other companies, when they're doing feasibility studies using 65. That's not a particularly aggressive, forward-looking view of the price of the commodity. We're already, it depends what you're looking at, but just spot, for example, is hovering around $54 a pound right now. Term prices are obviously somewhat higher, but we're looking at, being a producer, several years out from now. I mean, we're not really going to have uranium coming out of the ground until, closer to the end of this decade, 2029. Which is another point we'll talk about the timelines because you mentioned them. They still stay the same, but I think that I think our numbers that we're using are still conservative in nature. $65 compared to 50 from 2019, I think is quite reasonable.
Right, but so would you wait for the price to get there in order for you to start moving, or do you want to sign contracts before you actually do the bulk of the work, spend the bulk of the money, I guess?
Yeah, sure enough. I think contract signing at some point is likely part of the scenario, but I think those will be market-driven contracts. They won't be locked into a price of $65 to make it go. It'll certainly be market-driven, and my expectation is that the market will be a lot stronger, higher prices by the time we're ready to be producing. But I think that the whole outlook is certainly a lot, still very, very bullish, even though we're, it doesn't feel particularly wonderful in this snapshot of time, but I think we're in an overall trend, on the way upwards. So, don't forget, we're talking about several years away before we're, committed to, I guess by project financing, we'll probably want that in place over the next couple of years, but, and they will be backed by, I expect, at least some obligations on contracting, but really market driven rather than locking in at this price. But maybe the one other point I'll make too is that, you know, we're showing that we can make money at $65 uranium, but we can also make money at $50 uranium. Our break even price is actually much lower, and that would be, I'd say, in the low 20s. You know, so that, you know, that's including the, you know, the you know, you're looking at operation costs of around you know, just under $10 US a pound. All in sustaining costs with there would, you know, you'd add on another $3 roughly to, I think it's $12.75 US. Capital over 100 million pounds of 1.2 billion. You know, you add another $10 in there. It's you know, the point being is that there's some great margins on this project. You know, and I think that, you know, anything, you know, $65. We know this is a very viable operation. But we're not going to lock in prices at 65 at this point, not at all.
What about your relationship with the Chinese utility? They approached you guys signed a contract, not a contract, but you signed a deal, I guess, in 2016. They're taking 20% with an option to increase that by another 15%. Is there talking about pricing? Is there anything else that you can tell me about that contract?
Yeah, sure I can. It's an offtake agreement, but there's no, it's not price driven. What it would be is they would be paying market price for it based on spot. So there's no obligation for us to produce a certain amount each year, and certainly no price that we have to produce it for. But if we were producing, they would be able to have dibs on the first 20%. The other portion, by the way, you know, our the offtake agreement originally envisioned the 20% base plus the 15% optionality that you mentioned. The 15% optionality has actually fallen away because they've come to the there's a threshold ownership in the agreement where they were less than 17% owners for a consecutive period of 24 months. Therefore, they forever lost that 15% additional offtake. So it's really now based only on the 20% part of the offtake agreement now. So no longer the additional 15%.
When's the last time you spoke to the Chinese?
Oh, I was over in Hong Kong at the end of March. For a face-to-face meeting, which I hadn't, you know, we have very regular calls on Zoom and, you know, and just we stay in touch by email and Zoom, but it was the first in-person meeting I had at the end of March. And you know what, the CGN remained extremely optimistic. I mean, they're very bullish on the overall uranium market, but they're very supportive of the project. Having said that, you know, we are a North American asset, and there are some geopolitical issues that win between, you know, not between us, not between the company and CGN, our partners in this, but, you know, at the international scene between the governments. You know, I think it's not quite the same environment as it was in 2016 when we initially signed the agreement with the Chinese, but they're still happy to participate. They're very supportive of the project. They have been diluted down from their original ownership of 19.9%. They're now around a 13.5% partner equity ownership of the company. So they've diluted down, which means they haven't participated in the financings that we've done along the way, but they still remain you know, quite supportive of the project and happy to be involved with us.
What are you guys talking about, and how sort of generally their sentiment towards the capex on this thing? Because again, it's about 3 times your market cap. If you're actually going to build this yourself, you're going to need, I mean, you could use all the help you can get. So yeah. What are they seeing?
Well, there's no question. You know, it's not a small amount of capex involved in this project. I think that you know, like I said, my conversations with them is they want to stay involved in the project. They like it. we'll see. They've always maintained great deal of support. They certainly have the financial wherewithal to be able to contribute and to help build. But they're not the only the only mechanism that we have for raising the money that we need for CapEx down the road. I think there's other opportunities with other strategic partners to get involved. Financing will take the route of some obviously a certain amount of debt and equity, but I think strategic partners such as CGN, but with other names maybe involved, will certainly be a way forward. And then I always think that I think people should consider this as we'll call it a worst case scenario, the $1.2 billion, because remember, we're 3 kilometers away from another very successful project, and that's NexGen's Arrow deposit nearby. There's some very obvious synergies between the companies, for potential sharing of these expensive aspects of the CapEx that, I'm hopefully we'll be able to work out some agreement along the way where we can rationalize a single mill instead of seeing 2 mills built, side by side by 2 kilometers apart. Road infrastructure. There's savings that work for both companies on both sides, and part of my ongoing dialogue with our neighbors at NexGen is to remind us of these facts, and that there are some synergies. They realize that as well, and hopefully we'll be able to come to some agreement down the road. I mean, we're not there yet, but so far all of our modeling is looking at this as a standalone operation, as has NexGen done as a standalone operation. And yet there are some very, very obvious synergies that would substantially reduce CapEx on both sides. So
in the spirit of speculation, help me visualize what that might look like. What does CapEx look like for you if you only have to build half a mill? Or are you building only 20%? Like how does that even look? How does that even work?
It's a little tough to say, but some of our high level looks at this thing show a savings of around say $700 million combined CapEx between the companies. Well, that relates to around 35% CapEx reduction just by the obvious high level savings of sharing a mill, sharing roads, sharing who knows, having one housing facility instead of 2. I mean, there's just all kinds of scenarios where you could look at synergies, but I think the real aspect there is that's a real amount of money. If we're talking about 30 to 35% CapEx reduction, that would be realized on both sides. That's pretty real.
Right. Are they looking to do it on the same timeline as you are, though?
Well, we're not too far different. They're about a year and a half to 2 years ahead of us on the permitting regulatory side, I guess, towards building out. I think it'll take them longer once they begin construction and, development to get down to their ore body as opposed to ours, which is closer to surface. But, at the end of the day, they're going to probably come in a little bit ahead of Fission on the timeline basis, but they're not terribly different. You're looking at sort of a 1 to 2 year difference in timing on production. So they're not substantially different.
Help me understand something. Then you're basically ready to start bidding it. I mean, you technically are developing parts of it. You need some. We're going to talk about that hopefully.
Sure.
Some permitting there, of course, but I mean, you think you can build it on budget, even maybe under budget. You say the OpEx is very attractive, so it's going to be a profitable venture. You think you can build it on time, and you think you can do all these things. You already think that we'll go for the 65 and possibly above for a long enough period on the uranium term price or on the spot price or on both. Well, probably on both. And so your feasibility study says this deposit is economical. Ross, you can make it. You can make money off of it with contracts at 65. But then at the same time, you also started drilling your summer. You started a drilling program, a summer drill program. You just announced that today, actually.
Yeah.
Why is that? Well, I mean, why'd you have to spend money on drilling if you know that this thing is going to make money as it is?
Well, this drilling is not resource-driven drilling. This is geotechnical drilling. That's where you use the data to, help, better build in efficiencies and models. I mean, the feasibility study is pretty comprehensive, but it's not everything. There's a little bit of extra geotechnical drilling. This is like in particular around the tailings management facility, and we back in. I guess in January, February, we had a winter program with a small amount of geotechnical drilling, which was based mostly for site infrastructure. So, testing the overburden in certain areas where we know we're going to, say, have stockpiles built. Well, you need to understand the 30 meters below that level, the characteristics of the overburden in these areas. So really, that's where even now with the drilling that we're doing that we just announced, there's a few holes to be done. These are geotechnical holes around the tailings management facility, just to get a better understanding of that area that we want to use for tailings management. Understand the water table level issues a little bit more. These are all, I guess, part and parcel of the advanced engineering work that we're doing, but we're pretty comfortable with where the feasibility study said. But there's a couple areas that we just need to prove up a bit further. This drilling that we announced today, that'll take us over. It's a very short program, and it'll be done before the end of June. And really, that'll be all the information that's expected to go into the advanced engineering design work.
You make a good point on the tailings.
Yeah.
Because that will probably have a large impact on whether or not you'll be able to get everybody on board, I guess, with the mine, environmentally speaking. Well, what are we looking at there? What's the plan? What are you hoping for when it comes down to the tailings?
Well, the tailings will be a surface tailings or subsurface tailings. It's not say as differentiated between NexGen's Arrow deposit, where they're planning at putting tailings underground, and but they also have a lot more volume of rock down there in their development areas, so they can put tailings. We don't have that because our deposit is so close to surface. By the time we start digging into the ground, you're kind of into the you get through the overburden, you're into the ore body. So that's an advantage because we're into ore, a lot quicker that way and nearer to surface, but it doesn't present the opportunity to have an underground tailings facility. But, every deposit or every mining operation in the Athabasca Basin from beginning till, now, and I think, probably primarily going forward will still be the type of tailings that we're looking at, with our, at surface, near surface. I mean, you dig a bit of a pit, it's like a bit of an iceberg. You have some of the tailings that sit just below the surface, a little bit of a hump there at the top of the tailings facility. But that's pretty standard operation for tailings in most mining scenarios, and certainly the history of the Athabasca Basin, and I think going forward, it'll still be considered the norm.
But you don't think there's going to be any more drilling or any more work done trying to move the probable into, reserve or something maybe even do, because I know that some companies will do multiple feasibility studies, even when it's the final feasibility study. And I'm not a huge fan of that. So I'm just wondering how you look at that issue.
No, this drilling right now is nothing to do with the resource and moving any inferred into, that's not what we're looking at here. It's really just meant for geotechnical purposes on building out the infrastructure. Now, to your point, there's still a great deal of growth in the deposit. There's areas that are currently classified as inferred. They can be drilled more, have infill drilling, convert them over from inferred into indicated, into, to move their way from resource into reserve. That's possible. Right now, we're not looking at having to do that. We think that we have have identified a certain critical mass, we'll say, in the ore body itself, outlining a 10-year mine life, with the, a 90 million pound, ultimately produced reserve out of the ore body that we have right now. Lots of room for growth, but that'll more likely come during the production years, where you'll use the, the cash flow of the operating mine in order to fund, further growth. We know the growth is there. There's still two zones that flank the, the ones that are in the economic study. You've got one on the west side, you got one on the east side. Those will, I'm pretty confident, be able to be converted over into the higher category and into the mine life, but they'll probably wait until we're, into production before we do that. And also drilling at depth. We know the ore body continues at depth and it continues along plunge. There's a lot of open areas on these zones. I think a lot of room for growth, but they'll happen, I think, during the production cycle rather than anything leading up to it.
Right. That's encouraging to hear for me. That's how I preferred. Because sometimes, those maybe for the listeners, sometimes some companies, and I'm not necessarily targeting anybody, but sometimes some companies just drill for the sake of drilling. And I don't like wasting money on that as a shareholder of some of these companies. So anyways, Ross, since I was thinking about, I was just talking about, bringing everybody online with the environmentally wise in terms of First Nations and so on and so forth. And since we last spoke, you've also announced a number of news releases regarding your First Nations. There's 6 First Nations on your project, I believe, that could be influenced by this project, basically. How's that discussion going? What else do you need from them, basically? What are we looking at?
Sure. Yeah. So just to summarize on that, there are a number of, the government gives you a list of quite a few stakeholders and a number of rights holders. So rights holders would be the indigenous groups, the First Nations and the Métis that are in the area, and they can show they have established traditional, land usage around your project area. And in that, there's 6 key groups that you mentioned that we have agreements with. So that's all of the key indigenous groups that are already have signed communication and funding agreements. What they allow, what they're really designed for, and what they allow for, is a greater level of communication, transparency. We're working with their consultants, their legal representatives, so they're involved in discussions with us where they can understand at a very transparent level what's going on at the project level, what it means for them, how they'll be impacted. And coming out of that, I think it's likely an evolution to a few impact benefit agreements with the key groups that are established impacted groups, and maybe there's four of them out of the 6 that we may end up with some form of an IBA, and we'll be looking to build those in 2023. So hopefully by the end of this calendar year, we'll have agreements in place, and they involve support on either side. Like, these are groups that want to see the project go forward, want to see development in the area. The IBAs are really meant for the economic spin-offs that come out of it, the number of jobs that you can provide to the local people, guarantees, I suppose, on the number of jobs, the services, these sort of things. So it's an ongoing, part of the business to, continue building these relationships. They're not done in 1 year and that's it, and you forget about them. We have a team that's engaged in this full time and will be throughout all this development part of the cycle, but also during production. So it's not something. It's just something that continues to ramp up and becomes more and more important. Now, for us, we understand that it's key. We're in an area that does have Indigenous people that have traditional rights in the area. And they want to be able to understand and see what the benefits of having an operation in their area are. And I think we've seen a great deal of support from the local groups that they want to see project development. They just want to make sure that they're part of the equation.
How much of an issue could that be? Like, is there something that could arise that could be a deal breaker? I guess financially it shouldn't be that much of an issue. You can talk to me about how much you're budgeting for the team that is busy with that, and like how the money that you're actually directly spending into that issue. But also, could it be a deal breaker?
Not a deal breaker on the financial side. That's not the case. But if you don't have support for your projects in an area, that makes permitting a lot more difficult. The government is more apt to be able to sign on when they see that there's support by the local people that live in the area and have so for a long time. They want to see these sort of agreements in place, and that really helps them to be able to say yes, we can provide permission for this project to go ahead. If we're seeing that they've done everything well on the environmental side, all the baseline environmental work is there, it's all sufficient, shows that we understand what we're doing, what the impact of what we're doing in the long term, how we fix things at the end of the mine life, but also seeing support by the local people. It goes an awful long way, and these are all aspects that weigh into the government's process of providing permission. If you don't have support, I think, but that it's a harder task to go forward. But I think that we are seeing a great deal of support, and not only at our end. Look at NexGen, and they've been able to sign impact benefits agreements and have the full plethora of approval or support by the local Indigenous groups for the projects. These are the same groups that we work with. I mean, the projects are so close together. I think we're kind of following down the same pathway and the same support. And everything we've done, you can go ahead and look at our website, look at videos that we have with the local First Nation representatives, that are saying, telling the virtues of Fission and how we're able to operate, and they're quite happy with the work that we're doing. It makes it a lot smoother and a lot easier to get a project permitted when you do have support at the local level. It's not impossible if you have a few people that are opposed to it, but it's much easier when you get support, and we have that.
Right. Talk to me about your team as well, because you've previously told me that the plan is still to go through with the build out of this mine yourself. There's a lot of speculation about you potentially being taken over. Well, actually, maybe you can talk to me about that first, then we can talk about the team. A lot of speculation out there about that. Are you still confident on going through with this?
Well, sure. We're confident to go through with it. My motto has always been to build the group up, the team up at the level that we are working in, and how we foresee ourselves 2 or 3 years out. We evolved from being an explorer, from one of the most successful exploration groups out there in the uranium business, making discoveries. We've been able to find a deposit that has economic merit, shows a viable project that looks like it has every possibility to go through on the production side. Now you start building a team around it, get in your mine engineers, permitting specialists, community relations experts, and so we've done that. And I think as we move forward down the way, we're going to continue to evolve to be a producer. I mean, this is really, how it is. I don't think you take your eye off that ball. It's continue to evolve and grow your company, expand. So we will have gone from an explorer into a mining company. So that's the cycle. I'm not taking it so far and then say, well, I don't have any vision for what we as a company do with this anymore. This is as far as I can take it. I don't think that's at all the case. We just continue to build our team out, and we will be a producer. So whether we do it alone, or we're in partnerships with others, or we get taken out, this is a whole M&A equation activity. I think we've been able to demonstrate that this is one of the most attractive development stories out there, and the potential for all of the above are in there. But we will continue to move this project forward through the development stage, and and at the end of the day, we'll be Fission Mining Co. too, as well. But there may be other partnerships involved along the way. Those are more business decisions, I suppose. But we'll take advantage of the right opportunities that come our way.
It's interesting because one of the hires that you made since we last spoke was a lady who's got experience in M&A. She's a lawyer, I guess a securities lawyer, and also M&A experience. So what do you need her to do? What did you take her on?
So I think who you're referring to is Beatrice Orentius. Now she's a new director on our in the company. I think she came on in February of this year. She brings she is not a non-practicing lawyer, but yeah, she has a legal background. Her expertise is on the ESG side of the equation, environmental, social, and governance aspects that are obviously core to to all companies. We see it at from the biggest of the mining companies, or the biggest of any companies, but in the mining sector alone, you're looking at the majors like BHP and Rio. I mean, they have such a focus on ESG, rightly so, and it's a roadmap for us that we have to take the same approach if we're going to be serious in this game of mining. We have to have the same mindset and build our expertise as a whatever we are. We're a developer, a mid-tier developer group that is taking a project to production. The ESG component needs to be an absolute part of our core business model going ahead. And certainly if we're going to attract partnerships with the larger companies, they want to see companies like us acting in a manner that fits with their overall philosophy. And it's just the way business is going anyways, is a strong focus on ESG. So I think Beatrice gives us that level of of knowledge and background into an area that we know that we have to continuously build into our company philosophy and business models going forward.
Right,
so, yeah,
right.
It's been a great addition.
One of the other hires you made is also the gentleman's also got environmental background to deal with that, so it's a good point. What about Ross McElroy? I mean, is he going to be looking for a new job in 7 years when you become a producer, or how are you looking at this?
I have been involved with this project since day one. My goal, I mean, I'm a geologist by background. My expertise is probably throughout the whole mining cycle of exploration, development, and mining. I've kind of been involved in all aspects of this. I'm very happy to be able to continue at the helm of Fission Uranium and guiding it forward as we go along this pathway to being a producer. And I'll stay committed to this project all the way along. I don't have any short-term plans. Oh, well, this is good for me now to get out. But whatever makes the most sense for the company at the time, I'll be very supportive. I'm a large shareholder of it. I'm a firm believer in this project, a firm believer that it will go forward, and I'll do everything in my power to make sure that this project is operating the way that it needs to be. So I'll continue to stay involved as long as the shareholders are happy to have me involved, and and the board and the team are happy to have my involvement, I'd love to stay involved with the company.
Maybe I should interview them and ask them behind closed doors what they think about you.
There you go.
How's G&A doing? Because I think last time we spoke, you were at around 4 million a year. Some new hires. You're probably looking to hire more people or not. I mean, I don't know. Talk to me about how that's gonna evolve.
Sure. Yeah, our G&A budget this year is, you're right. We're targeting around $4 million. We're actually under budget every month, which this has been sort of the case over the last 2 to 3 years. We put together a G&A budget. We've always been able to come in under whatever it is that we've sort of said, which is good. I mean, it's the demands that we put on the team leaders and the group to be able to work as efficiently as possible, and save where we can, and just run as a lean, mean machine. But I think we do continue to build the team out, and that's built into our budget to continue to build out the team. We've had a number of new hires, and we'll continue to have new people. So the key, obviously, a few years ago was bringing in a mine engineer, with experience as the vice president of project development. That's Gary Haywood. It was absolutely key to our pathway forward. Gary's just been absolutely wonderful. He's embraced all aspects of operations of the group, and we're now bringing on additional people on the permitting side you mentioned, but we're also bringing in more, building out our engineering team to be, that are more specific, in the different areas that are necessary. And so I think that we'll be adding probably another 2 to 3 key positions this year. We're actually looking at more than looking. We signed an agreement to open an office in Saskatoon, so we now have some retail space for space leased to build an office in Saskatoon, and it'll really be for operations. So our engineers and permitting people, there are already a number of them already living in the Saskatoon area. This will give them a central place to work. So we have headquarters in Kelowna, which is where I'm located, which has always been, I guess, the headquarters of the company. But the operations side will be based out of Saskatoon as we start moving forward.
Yeah, of course, it makes sense.
Yeah.
I hope you don't like hockey in Vancouver, because that can get costly too. But maybe we can talk about your corporate development and PR spend, because that's gone up. First quarter of this year was 400,000. Is that going to keep going like that? Like, do I just put a line through and say 1.6 on an annual for corporate development and PR, or is that too much?
No, I think it's probably a bit too much. I think we're a little, as I said, the whole spending of what we've done has already been budgeted and approved back in December for this year. I look at the overall G&A side, which includes that. We're not going to deviate from what we've said on the G&A side, the 4 million for this calendar year. But I think some of the corporate development side, it was maybe a bit more front end loaded, in the first quarter of the year. Not so much. You won't see so much in the second half in Q2, Q3. Will be. We're starting to travel a little bit more now, which is the reality, which is different from the previous 3 years where everything was online. Meeting people, meeting shareholders was really all done with Zoom and Teams. But now we're getting out a little bit more and starting to see people in person, which is a key part of our business. It is a relationship business, and it does require a certain amount of seeing people face to face and getting out and continue to promote the company, seeing things. So there's a bit more spend, say, compared to what it would have been last year as to what we're doing this year. But as the project continues to do, to develop and grow and expand, you're spending on what you need to do to continue to build the corporate side of the business, the visibility of it. Of course, naturally increases somewhat, but we're very, very disciplined. I think we sort of stay, almost the same. It's a little higher this year than last year, but not substantially so.
Right, right. So having some 40 million, I guess, in cash, do you think you have to be tapping the ATM facility more because you've been using that in the first quarter? So are you going to be using it more throughout the year?
Sure. I think, certainly likely to. Yeah, we have 46 million dollars in the treasury right now. We have tapped into the ATM probably since November or December of last year was when we really started, taking opportunities to utilize some of the ATM in the facility. We've raised maybe around $20 million or so in the ATM. So it still leaves us with around 30 million potentially between now and the end of year if we want to tap into it. The ATM it's not something you do all the time, or, we have certain periods if things are looking attractive to us, if we think we need a little extra cash or, for whatever reason, want to build up the treasury. The ATM gives you the flexibility, the timings on our side, to be able to utilize. I think it's a good way to raise money. How much of that we'll utilize over the next several months, I guess is yet to be seen. But we're looking at our operations side requiring around $21 million this year. We're more than financed to be able to do that, and looking at around 22 million in 2024. So even between what we have to do this year and next year, we certainly have the financial capacity to do so. But we need to keep a healthy treasury in there as well. You don't want to be running the treasury down on fumes. So I think it's important for us to be able to continue to add. The ATM is one mechanism to do so. Possibly we would raise more in a traditional sense of a bought deal or something, but not at these price levels. I'm not particularly happy with where the share price is right now. I think every CEO of every uranium company is probably saying the exact same thing. They've certainly seen a decrease in the last couple of months on the value of the companies, and that I think with $45 million in the bank, I'm not in any hurry to be raising any significant amounts of new cash at lower prices. We think that there will be a turnaround. The share price will substantially increase, but so I'm not looking to pull the trigger anytime soon on something major there. But there's a number of things in the works. I'm also wanting to go down the path of being a U.S. listed company. So I think that if the market's right, if the conditions are right, that is a path we will follow in the second half of 2023. We won't do it if things are pretty slow and there's not a lot of interest in these are all temporary aspects in the market. And I think there's been some jitters overall. I think based on the bank collapses,
Sure.
The U.S. I mean, there's a whole plethora of reasons why, but the sector's been suffering lately, and volatility has been kind of drying up a little bit as of late, say as compared to where it was a year ago. But I think that's a temporary situation, and if things start looking a little bit more attractive for us, certainly getting a U.S. listing in the works in the latter half of 2023 is certainly on the plan to go forward with.
Sure, but unless your stock doubles, which is kind of a strong assumption, you're going to have to do a rollback to get above $1, right?
We're going to have to, yeah. It would require, if we do go down that path, it would require a rollback. No problem. But if you do a rollback for that reason, that's a good positive reason, and that should, it's a reason to do it. I mean, quite often junior companies, when they're doing a rollback, it's they're just.
It's because they've gone from $2 to a penny.
Yeah, so it's just it's a bit of a lifeline aspect, but for us to do it, if the reason is based to do a U.S. listing and be able to tap into a greater capital markets, that's a certainly different reason for it, and I think you'd end up with a different outcome. So it would be seen as more of a positive effect rather than negative.
Yeah, sure. I guess sometimes it's psychological too, right? Because falling from 2 pennies to a penny is a 50% loss, as much as falling from $1 to 50 cents is a 50% loss. But people see it as more likely for you to fall from $1 to 50 cents than from 2 pennies to 1 penny, if that makes sense.
Well, sure, it can do, and you're right. And this is like I say, it's quite often one of the methods that smaller juniors use just to, I don't know, just to show that there's a price increase somehow. But if you do it for the right reason, I mean, if tapping into the U.S. market, increases your exposure and a greater list of capital, increases liquidity. You can start attracting different customers to the story that we're probably missing in today's scenario. So I think if it's done for the right reasons, I don't see it as a negative at all. If it's done for the wrong reasons, of course, it would be perceived a negative.
Sure. Have you guys talked about the team participating in a possible next financing? Because insider ownership is relatively low to other companies in the sector. I don't think you even have it on your presentation anymore. So are you addressing that, trying to raise it, or how are you looking at this?
Yeah, I mean, I always encourage insider ownership of the company. I think it's important that you have skin in the game, which is why I continue to increase my position as well. If you look from where I'm at from a year ago till now, probably an additional 30 or 40% ownership of shares from where it was even a year ago. But I think that it's and encourage other insiders to do the same. Take part in, and if we're doing any additional raises, I'll continue to participate and get our ownership up. But I mean, only one person in the group. But I think it's truly important for for people that are buying into the story to see that management and insiders have stake in the game, because we believe you believe in your story, right? And this is it's a key part of the confidence building measures that we go through, and I'm a firm believer in that, and I'll continue to build my position. I'm so comfortable with this company, this project. I think our best days by far are ahead of us than anything we've seen behind.
So you're seeing that. And I'm wondering why the market is not seeing that, because the price of uranium is up let's call it 150% over the last 5 years. And although the stocks are still lagging because volatility is being sucked out of the market for many reasons, the URA ETF is still up 50% in the same period. Some of your peers have seen nice move upwards as well, up more than doubling. Fission's down 15% in the last 5 years, despite you having done all that work. I mean, dilution's a part of it, but what else? I mean, what's the market missing?
Well, it's true. I mean, it's frustrating. I think there's part of it is developers are maybe hit harder recently in the last few months, more so than brownfields groups that are looking closer to production. That might be part of the scenario. I haven't looked at every company to see how we measure up on that level, but I feel as the developers were probably as I said, in the last couple of months, maybe particular, there's certain times that where those are the stories that companies want, and right now it seems the last couple of months have been a rough market to be going through, but I do think it's temporary. I think the price of the commodity is certainly not disappointing, and I think it's only poised to go significantly higher, and that will work its way down to other stories. You have the big companies are the first to to get carried forward with the prices of the commodities and stuff, and it moves into the next level down. Developers, they start going, and eventually smaller juniors, start taking part in the game as well. So there is always a bit of a lag depending on what level of a company you are as to where you're at. But the price of the commodity to me is going to be the beacon that continues to lead us all forward. It hasn't suffered at all, and I think the whole uranium story just continues to be more and more compelling. And it wasn't that long ago that we were achieving price highs in the company that you say now we're down 15 over 5 years, but it wasn't that long ago when we were sitting at multi-year highs, right? It is a volatile market, anybody that isn't a producer is certainly a lot more volatile than those that are producers or further along. But I think there's also, I look at this as just opportunities. This is a truly great story that isn't going away. It's only going to get better. The overall sector is, will start stabilizing, and I think that there's greater room for rebound in companies like ours. So you want to, if you're looking for value plays, the value hasn't gone down any on the property and the asset, and we are moving it forward, and it's getting closer to production. I think there is a buying opportunity that keeps screaming, for patient investors. But
it's interesting where all companies are really, when you look at the prices in November of 2021. I was just looking at it over here on my screen. You're exactly twice as high as today. You're today at 56 cents. You were $1.12, $1.13. Not 2 years ago, like 1.5 years ago. And at the same time, you've done some work, and I see that you actually also picked up a new property. Maybe we can talk about West Cluff Lake as well. But it's true what you made a point there. A lot of companies have been able to advance, although with some dilution. Some of them they have advanced the projects. They're securing somewhat of a future for themselves. Yet share prices down like 50% from the recent highs. So. Yeah, but talk to me about West Cluff Lake, because I know you almost got to go here, and I wanted to cover that as well. Sure.
Well, West Cluff, look, it was an opportunity that stood out. Land in the Athabasca Basin, it isn't always available. This was an opportunity. It became open for public staking in I guess it was December, the tail end of 2022. So. The West Cluff property is
why, by the way, Ross, I'm sorry for interrupting, but why would a property in the Athabasca Basin become available just for staking? Like, why would somebody give up on it?
Maybe it was owned by a junior that really couldn't raise the money to do exploration. It's inexpensive to stake ground. If that's your model to be staking, it cost us, for example, to stake the West Cluff property. I'm going to say $1,000, basically to secure the ground. If you know what you're looking for, it's inexpensive to stake that ground. This opportunity was there. We staked it. Probably the previous holder staked it. He has 2 years to do a certain amount of work, couldn't raise the money, didn't have the ability to do anything, and therefore the ground lapses and goes back into the Crown, inventory, and then it becomes available for staking. And that was really the opportunity that we saw. What I liked about it is that it's sitting right beside and on trend with the old Cluff Lake mine. Prior to all the excitement that we actually started on the western side of the basin 10 years ago, 10 and a half years ago, Cluff Lake was the main story. They were the operating mine run by Orano, and mined out about 20, roughly 22, 23 years ago. But that land that circles around it, it's basically an uplifted plug of basement rock that's jammed its way up to from the over 1,000 meters deep to sitting up at the surface. right now, and that's where the Cluff Lake deposit sits. So basically, we're looking at the same model for why Cluff Lake was there, is, you know, the potential for West Cluff to host property. It isn't a huge priority for me at the moment to be spending money on exploration there. You know, we might do a minimal amount to hold the ground, or, you know, maybe the market gets better, we raise a little bit of exploration money, you know, do some exploration up there. But the fact is that the opportunity was there to inexpensively stake what we think is a really nice looking piece of ground. And, you know, the opportunity will be there over the next couple of years for us to do a little bit of work on it. I still say our priority will be exploration on the PLS property itself, you know, going forward in 2024, 25. I think we're probably start doing some more detailed exploration work again, not only the mine development and moving that forward, but hunting for further targets on the PLS ground. But West Cluff gives us just another opportunity for you know, for exploration advances. And, you know, with the team that we have, I'm really confident that we can you know, put that to good use and make new discoveries, which you know, are a bit of the lifeblood of you know, companies. This is you know, one way to increase your attention to the market, you know, and market cap is by having new discoveries. So but our focus is really moving RRR on the PLS project forward. Exploration, I think, comes into play as part of the equation, but we're not taking our eye off the ball on moving this project forward to production.
Right, right. This is also just 3 kilometers from the past producing Cluff Lake mine, as you said.
Yeah, yeah.
If there's something worthwhile there, I'm just thinking, why wouldn't have the operators of that mine already found it? I mean, what makes you think you know something more than they do?
Well, you know, a good example. I used to work for that group back in the 1990s when we were looking for other areas around Cluff Lake or on the western side of the basin. Well, we stepped out and found the Shea Creek deposit. So I was in that group of explorationists with the, you know, the predecessor to Orano that made the discovery at Shea Creek. And these are all, you know, things that made sense to me when we were busy putting a little bit of work in Fission on the western side of the basin that led to our discovery of PLS down there. Just because you're the mining company in the area doesn't mean that you've really exhausted all your exploration ideas and potential for making new discoveries. And you know, we see it on the western side. You know, we're not you know, it's been a while since anybody really put in any exploration work into the area, but you know, the juniors have all been the you know, the recipients of these discoveries. It isn't the major companies anymore that seem to be making these sort of discoveries. They don't put a lot of emphasis into exploration that the smaller companies do, and all the latest discoveries in the last 10 or 15 years in the Athabasca Basin have really not been by the Camicos, not been by the Oranos. It's all been by the Fissions, the NexGens, the, you know, these kind of the old Hathor. You know, it's the smaller groups that are more nimble and able to start exploring in areas that maybe the larger companies just are too slow to do or unwilling to spend any money on exploration. But that's been the history in the last 20 years up there.
Good points. I think I've been through most of the stuff that I wanted to ask today, but I know you got to go now. What am I forgetting to ask you here?
I don't know that you're forgetting anything. We've touched on an awful lot of information, but I think it's just to remind people that the uranium sector, I think, is just at the beginning of a long bull market. You know, I think we're seeing you know, I don't know. We're seeing, obviously, no market continues up in a straight line. There's no question about it. So, you know, I think we're seeing the first pullback in but in a major bull market. I wouldn't get too worried or upset that the nuclear sector is, you know, in any lagging situation. I think the fundamentals behind it continue to get stronger. And don't forget, you know, the development stories, projects such as Fission's PLS project are so far and few between. this is one of the best development stories. It will be a producing asset, down the road here, and we're continuing to to take all the steps necessary to get it there. So I think that I would love to see new shareholders come into this and look at this as an opportunity to invest in high quality tier one companies that have tier one assets in a tier one jurisdiction, which is where we're at. There's all kinds of reasons, a lot of good stories, I think, in the sector overall, and this will be one of the preeminent stories out there, Fission's PLS project.
Thank you for joining me on the barbecue, sir, and good luck.
Thank you very much.